Hello, everyone. Man, it feels like it's been a month since Ben and I have done one of these lives. It's been a whirlwind of things and life situations for those who have been following my dog. He's still alive, so that's good. I don't know for how long. We shall see. I'm just continuing to pray and have my faith that if he's meant to be around, he will continue. And if not, then I'm going to enjoy the time that we have. So I was giving just a little update on Renly.
Oh, nice.
Yeah. So how are you doing today, Benjamin?
I'm good.
I was just pulling our notes of our topics. So
Okay.
yes, I
Nice.
still need to find one more thing on our notes, but that's okay. We're just going to roll
Wing
the
it.
tape. No, we're not doing that.
Joking. It was a joke.
Although we are very good at that. So I am going to have you start. I want to bring up bridge loans again and the benefit of using them in today's market really quick.
Okay.
And let's start with that today. So what is a bridge loan? Why are people using it? What would be the benefit of using it?
The biggest benefit for using a bridge loan
Pause.
is
What is a bridge loan? Go.
what is a bridge
Yeah.
loan? What is a bridge loan is basically the same as what the definition or the answer of the is a loan. If you currently own a house now, it bridges so that you don't have to sell your current home to purchase your new home. So some of them cancel out payments. Some of them can let you access equity. Some of them are super expensive. Some are not so expensive. It just allows you to buy your next house and bridge the gap between that so that you can take your time and sell and or figure out how you want to do that if it's already listed and not selling.
Yeah, so this would be someone that, maybe has a lot of stuff to move or, doesn't, maybe has some improvements, and we'll talk about that and what buyers are looking for right now to get the house ready. You have a lot of stuff. Maybe you lived in the home for 30 years, maybe just 5 years, but this does give you that opportunity to move, get your home sold and on the market within 6 months. And I know how you call it, like some are expensive, some are not. I like to call them convenience fees because in anything, the convenience of you not having to have your home be show ready and, on the market for all of that, even though showings have slowed down, this is the convenience fee to be able to do that. And so it just comes down to what makes sense for you and at the end of the day, how that works around it. So.
Yeah,
A
they're
lot of
really
people
cool.
are using this. Yeah. So to me, I think the convenience fee is small um, for that to be able to get your home packed up, get those things fixed and out the door, but it doesn't make sense for everyone. So,
No, 100%.
okay. Now, I want to talk about what buyers are looking for right now in homes to
Okay.
educate sellers on getting their homes ready. So, I did my own little research and then I went to ChatGPT to kind of see what that looks like. But buyers, because interest rates are where they're at, and I think it's going to be like this unless they're in the fours, which I don't even know that that will ever happen. This is going to be the mindset and the philosophy of buyers going into things. They really are looking for move in ready homes. Now, previously, that just meant that it was clean and there wasn't a lot of projects that had to be done. I think what move-in ready of what I'm seeing with buyers now, especially if they're second home buyers, where they've, this isn't their first time home buyer range, is they do want new paint, they do want updated things if there's a higher price point. They do cleanliness is huge. Things that people are calling out are like molding, which to me, when Ben and I had our home on the market, I was like, no, we don't need to do that. It's kind of an expensive thing. But it did get brought up a couple times. And so just think from what you think needs to get done or not. That's why you have a professional come in and look at, what's selling in the area, how are you comparing to those and everything else. So you're not doing a bunch of upgrades that you don't need to do. That they really are looking for that. Let me just place my furniture, not having to fix holes in the wall. The carpets are clean, the flooring's clean. We're not coming into a ton of projects.
Mhm.
The kitchen cabinets aren't falling over when they're opening the drawers. Like people get intimate in your home and they will open things. So the little touches of when you pull a drawer open, is all your utensils just thrown in there? I'm gonna sneeze, maybe not. Or are they, excuse
Bless
me,
you.
or are they all organized? Like those little simple things that you don't think people are paying attention to, they are right now. Because what you're hiding in the cupboards, they're going to see, like start to think, oh my God, what else is going on? So those general maintenance items, having your furnace serviced. How old is your water heater? Have you gone into the crawl space in the attic? Like, let's prevent some of these higher ticket items coming up later. Is the roof clean? But yeah, move and ready and cleanliness is huge. And don't take it offensive if your agent comes in and says, okay, we need to clean this and you just cleaned it. Everyone's different of lived in clean versus
Yeah.
selling clean are totally two different things. Just like when I come out to your house, I don't expect it to look like if you have folded laundry on the counter or whatever, that's normal, but we also then need to get it ready to sell. And that's a completely different situation. They're also looking, one of the top things was like outdoor space, potential area for an office if there is one, for people that are still working from home or kids doing online schooling. Updates are always huge. That doesn't mean that you need to put in the most expensive quartz or granite or tile or whatever, but are there some things that we could do in order to make it nice? We have a company that can come in and help get some of those things fixed prior to listing. That's why one of those bridge loans come into help for that. But they are unfortunately looking for that nice new construction feel without paying a new construction price. So if there are some things that can be done that you could see a return on, and if not, then you just have to price appropriately and make sure that, it is in pristine condition of what it is. And then the last thing was just location. So depending on your location, making sure that you're pricing appropriately for, how close are you to things? Are you driving down a dirt road to get to your home? Is there a lot of speed bumps? Are you, how's the house face? Like all of these different things that we buyers weren't looking at before, they definitely are. They're looking at the neighbors. They're looking at the whole community as a whole. What's the drive-in? What does it look like? So they're just tending to be a little bit more pickier than most because their payment is much higher now. Do you have
Do,
anything you want to add to that?
do you think, just a question, right, is do you think as these rates do come back down, in maybe in the fives and then in the fours, if we do get there, or even further, if they ever do come back down that low, that you think they'll tend to go away from, being a little pickier on that? Because I think with what you just said, I think therein lies the opportunity for these home buyers. I know that, if we do or someone does updates to the property, they're going to look for top dollar. So if they're already spending top rates at the highest payment they're at, you would think that they would want to find a home that's not those so that they can get a better price so that they can do them themselves, know it was done, number one, right, and number two, they can earn that extra kind of sweat equity in what they did to customize it for themselves. Do you think that'll change as the rates come back down, or what do you foresee in
I
the future?
think you have two separate questions in this. So
Okay.
what the first thing I'm hearing is there opportunity for buyers to come in and purchase homes that don't have that, and then put the sweat equity. I do not feel that sellers are pricing yet adequately for that.
Mm.
So I think we're still going through a period of time where agents may, or sellers coming in, not all of them, that they still want or need X price, but their home isn't, the buyer demand for that isn't at X price. So
Agreed.
is there some opportunity there? Yes. Um, location plays a part into that too. I think we're hitting right in that time where we will start to see that, where prices are coming down and people are feeling that right now. That has a lot to do with inventory. That's also what brings up to the next question, which you said, when interest rates go down, would that be as important to them? Yes and no. It's going to come to inventory again. So if we're still seeing a lot of inventory, which we're still not as much, but more than we have seen the last couple years, then I think buyers are still going to have, with low interest rates and inventory, buyers are still going to have the upper hand. But when inventory goes down and there becomes more of a buyer demand for properties, then that's when you see some of those things start going away, because it's like, man, I just need to get into a home versus I need to get the home.
And there may be multiple offers and you just can't be picky. You have to take what's there versus because the inventory itself. So
Right. And so there is still multiple offers on things going right now, in that first time home buyer range. So that's why I'm saying, like, first time home buyers can't be as picky, I guess. We really need to put on your investor hat and look at, is this an investment opportunity to help build wealth for me? Am I going to get a rate of return? Can I put some sweat equity into this? Can I start paying money towards my future versus my landlord's future or the apartment's future, right? Like, that's really where you need to look at. Can we rent this down? Can we rent this property later on in the future? Or, is this something I can gain a bunch of equity and put it towards my next home? So all of those things, as a real estate agent, should be having those conversations. It's not going to be the perfect home, but maybe we need to rent out some rooms to make that payment a little bit more affordable and house hack. There's a lot of different options, but you really can't look at, I'm renting a 4-bedroom, 2-bath home for $3,000, but I'm really going to only get a 3-bedroom, 1.5 bath, and my mortgage may be 4,500. It's just a stepping stone, because what you rent, because someone else has paid off that mortgage, you included, for so long that they don't need to get 4,500 to cover their assets. They only need 3,800 or $3,000. So it is hard. It's a mind FUCK when you're going from one to the next, but just know that this is a stepping stone, and you're never going to get that type of money from a job, maybe an inheritance potentially, and over those 5 years, in order to help build for your future.
it's definitely an investment.
Yeah, so that's what I always tell, like, we are going this as an investor. Not, this isn't going to be your dream home. This is going to be building towards your future. Is this something that you could live in for the next 5 years, maybe 7 years, right? Okay, perfect. Let's put a plan around that. And maybe not need to be the next 5 years. Maybe you get a promotion at work and things change and the market shifts. I mean, during COVID, our market went up like 40%, crazy, but
Yeah.
that's not going to happen again. And we don't want that to happen again. So. Okay, moving on to the next thing. So number 4 on our do nots of our 10 do nots when buying a home is change jobs or change positions without speaking to your mortgage professional. So do you want to take that on?
Yeah, just if you're going to get a promotion, if you're going to change just a job in general, and you're in the middle of the process, please wait and have a conversation with us as a lender. It can truly affect your qualifying income if you move from 1099 to W-2 or the other direction, and we are averaging your income at, maybe $8,000 a month. And then by changing the job, even though maybe you got more hourly, because you don't have the history and we were using overtime, maybe we can't anymore. And so now your income's only $6,000. So the biggest suggestion, like you just said, is do not make a change without talking to your lender before, during, and after a transaction.
Love that. I see that a lot in, we've had that come up with medical jobs and people in
Yes.
those situations that are on contracts and then not contracts. And then they think, well, I'm doing the same job, but now you've signed a permanent contract, so you don't get your travel pay. There's a lot of that. So just make sure that when that time comes, I know it seems weird, like, oh my God, I gotta go talk to dad again or mom again about my job, but it really does. The more you can be in communication with your lender, the better. And even why it's important to, in my personal opinion, not use a bank, because oftentimes you need to have these conversations after hours or on the weekends or whatever. So making sure that you have someone that is full-time in this business working on your behalf is huge.
That answers their phone.
Yes, that answers their phone. Exactly. Okay, so I want to go into just a seamless plug about our vendor program. So we had our first interest meeting, which was awesome. We had about 10 people show up, and it was really exciting. I just love hearing people's stories. I tell Ben all the time I have a passion for learning about people and where they come from and what they're passionate about and how they want to contribute and their goals and all of that stuff. So it was really fun. And there's lots of different options and stuff coming down the pipeline for our clients and our resources and our community. But if you know of anyone in any field, let us know if they would be interested in a conversation of linking up with other professionals and creating a sense of community where we'll pass referrals to each other, learn to grow each other's businesses. I mean, the knowledge in that room with just the 10 of us was phenomenal. I walked away definitely learning a lot. So, and it's nice to be able to say when my client's like, hey, I need an electrician, perfect, here's the top 2 people I would use, and this is why. So do you want to add anything to that?
We're looking for dynamite people. I mean, there were some really amazing people in that, and I'm so excited to meet more amazing people that give what we give every single day to our consumers and our businesses. So
Awesome. So we'll have a website here soon. It will be joinlinkup.com. So be on the lookout for that, and some marketing materials. If you know of anyone or want a flyer to put up somewhere, let us know. That would be awesome. The last thing I have on my list before I hand it over to you for your list is this weekend I had 3 appointments with people, and 2 of them were in pre-foreclosure. And so I just wanted to touch on that again a little bit. Both have equity in their home, lost their jobs and couldn't pay their mortgage. So they're about 90 days late and got a notice in the mail. Thank God they opened it, because I know sometimes that can be scary and fearful of what their options were. So we sat down and had a strategy meeting. I think the best thing was just feeling hopeful, knowing that there are options out there of what that looks like, and for you not to walk away from your equity. I mean, one bought in 2021 and have still about 90K that they could walk away with and really start their life over again, go rent for a couple years, and then get you back in home ownership again. So there's just a lot of different options. And I think with all the noise that is out there, sometimes we get lost in, what's true, what's not true. How do I save my house? How do I, if I can't save my house, what does that look like? How long does this take? How long do I really have before they come take it from me? Just a lot of different things. And, this does not mean it's a market crash, but, those homes, people affordability in the job market can sometimes be a little weary, are losing positions and the potential of their property. So if you need someone to talk to, or you know of someone in that position that just wants a sounding board to know what their options are, I definitely am a great resource for that. I started in that market. Homes were sitting 10, 11, 12 months when I first started. That was normal and very normal for people to be selling prior to losing their homes. They just didn't have any equity then. So we're in a way better position that you can walk away and have some money to restart things for sure.
it's good. It's good.
Okay.
There's
handing it over to you.
a lot of resources out there. Reach out and don't feel like, you just have to give your home back. I mean, I know that some people back, during like 2007, 8, and 9, when this kind of hit really hard, they did, and they didn't think they had options. And they walked away from money and equity. And, not
Well, they
everybody,
didn't have equity back then, but they definitely
some,
missed out on some cash for keys. I mean, I negotiated like 40 grand for one client to like leave the home itself to get started again. And so there was some heavy negotiations back then, but there's still this time too. And I had a client recently, well, I wouldn't say recently, last year, an agent on my team's client walked away and she had like $40,000 of equity in her home. And she was like, well, yeah, they're just going to pay me that, right?
mm,
No, they're not. So they don't just call you
no,
up and be like, oh, here's the difference of what we owed. And that was devastating, but that's what she heard from someone. And so she didn't think it was a big deal or wanted to get people involved in the situation because she was embarrassed. But I mean, we've seen it all. Bad credit, no credit, good credit, divorce situations, personal things. I mean, Ben and I've been through it too. I had a car repoed back in the day, while being a homeowner. So it happens. Don't be afraid to just know that we are a safe place and it doesn't leave us with confidentiality, but we can help for sure.
yep.
We may even know someone hiring if you need a job. So
True
we
that.
got resources. Okay, Ben, it's your turn.
So I've gotten some questions recently on the OBBBA, the One Big Beautiful Bill Act. A lot of misconceptions, and I heard this, or I heard that, or it's going to hurt this tax, or that. Not to go too far in the weeds on it today. Some of the things that I took away from it that were pretty good was that they did make the mortgage interest deduction. They capped it at $750,000, which is okay. I don't have an opinion either way. Another thing that was really good is they did make the mortgage interest, even though they didn't change the amount, they did make the mortgage insurance interest deduction to income limits permanent. So until I think 2029 is what I read. I'd have to go back and look at it, but they did make it permanent. So that is really good because it does protect that, so they can't just take that away next tax season. There were a lot of other stuff in there that was pretty good. Again, I think there's a lot of pros and cons with it. The biggest suggestion here is before you just jump to conclusion or read something online that maybe not what the truth really is, or if someone says, I don't like it because of this, go do the research, go look at it, Google it, get in there, see how it affects you, talk to your tax advisor, talk to your people, reach out to us even to know for sure before you make any major decisions on anything by speculation or what somebody says.
Love that. Yeah. And I mean, I know that solar doesn't have the best reputation, just because just like there's shady car salespeople, shady real estate agents, shady mortgage people, there's going to be shady solar people. Having a family member that does sell solar and the stories he even tells me, I mean, he's walked away from clients before because he's like, this does not make sense for you. That is part of the big, beautiful bill or whatever you want to call it. Guys, that's not my thing. Is they are getting rid of those energy tax credits. So if you've thought about getting solar or wanting to take a look at it, if you're going to be selling your home in the next 5 years, I would say probably not the best idea unless you're willing to pay off that loan, because appraisers still haven't determined really what the value is. I've seen one on a $5 million home come in at $200,000 value. I've seen one on another home be negative value. So there's just not any standard across the board yet here, as well as a buyer is not going to take over your loan. So if you have a loan on it, the buyer is not going to assume that loan most likely, or even can afford it,
Yeah.
going in or qualifying going into that. So that would be my suggestion. But he also shared with me that AI by 2030 will take up 60% of our energy sources, which just means that there will be an increase in energy and what that looks like. So there are some benefits. And if you've been thinking about it, I would suggest meeting with someone and just talking your options, just like you would a mortgage professional, to find out if that makes sense for you and if it really will help you save that cost or not.
Well, over one thing I did do, and this is huge, is over time, as energy does increase, it will save you money. It just may not be an immediate savings based on what it is. But hindsight's always, it's just like buying a house. Sometimes it's a little bit more expensive, you know, for the payment, the 3,000 versus 4,000. But over time, you're going to reduce that mortgage payment, and you're building that equity, and you're building that long-term investment. So it's something to definitely look into.
Absolutely.
Last thing I have today is something really cool that happened on the week when we were out of town during the 4th. A lot of people who have invested in crypto in the past and have assets, it is now being proposed to the banks and to the lenders that they should be able to use a portion of that as assets in qualifying for a mortgage. Before, you had to sell that asset in order to use it as like cash before you could actually use that for any. Now they're proposing that they should be able to use that as it is in even some of our 401ks, our stocks and bonds and big bonds. They have them as one of the asset classes. So that's amazing news. I'll keep you guys updated as that comes along. And once that gets done, I'm sure it'll be very similar to what they currently have, where you can use about 75% of what's in the account based on liquid cash. But we'll see what those guidelines look like, and I'll let everybody know.
That's really exciting. I'm
Yeah.
really, really excited for that. On our ending note, I will tell you guys, if you're a buyer right now, I'm never going to force you into making a decision, but there are some crazy opportunities for you getting into properties, for closing costs paid for, all of that. Like, sellers are wanting to sell, and the ones that are on the market that are good are willing to offer some kind of concession. My fear is when interest rates go down, because inventory is still pretty low. In most places, we're still a seller's market. We're kind of in that dual market, but I fear when that interest rate even goes down a half a point or a point, all those buyers that were waiting on the fence are now going to be entering the market, which then is going to make it a seller's market all over again. And sellers are not going to be wanting to contribute to that. So, if you're under a certain income requirement, income, and you could do a zero down program, you essentially could walk into a home paying just for your inspection, which is huge. You can get temporary rate buy downs. You can get closing costs paid for. With some loans, you can get your debt paid for. Like, there just is so many options right now. And don't let the fear of payment or what's going on politically or what's going on, maybe something else. Like, this is the time to create some certainty and take control of what you can accomplish and what you can do, because we can't control anything out there, but you can control your destiny for your family and your situation. And like Ben says, turning the light on to just figure out, can I afford this? If not, what do I need to do? And if I could get some concessions from the seller, could I make this happen? Do I need to do some debt consolidation? Do I need to help with my credit? Whatever that may be, now is the time to really look at it so that you can get some assistance, because I have not seen a market like this in 10 years.
It's been, 2004
Plus, yeah.
applications, I mean, were the highest. Yeah, I mean, it's like that. And that's where, when you said in the beginning, buyers are being a little bit more picky right now. I mean, in reality, you shouldn't. You should be doing what you can, because those who were around for COVID, when rates did drop to that low, I mean, people were spending well over 20, 30, 40, 50 grand for homes. And sellers kind of did everything, and clients did not get closing costs.
they not only didn't get closing costs, you had to put low appraisal money
Yeah,
in to even get an offer accepted, which meant because they were going, I saw some go $500,000 over list price in
I
some
know.
markets, but let's just say it even goes up 100,000. If that appraisal came in low because it got pushed up from buyer demand, people were having to bring that cash. So you had your down payment and the 50, 60 grand of difference, sometimes 100 grand of difference. Like some buyers just, they couldn't do it. It didn't matter how low the payment was. They were just getting outbid from that lack of financing and funds and reserves that they couldn't have. So, I don't know that it will get to that place, but all I can know is based on history, what that looks like. And there's still a lot of buyers that want to buy in this market.
Hmm.
And they're just waiting, and that waiting for lower prices doesn't mean that, it's usually opposite. Our market may be adjusting because of price and inventory, and people may be pricing too high because they're pricing for a market that we were in, not a market we're going into. But there's huge, even if you're not a first time home buyer and you want to sell or rent your home out and buy your next one, maybe you don't get 20 more grand on the home you're selling, but you pick up 50, 60, $70,000 more on the home you're buying because you get it for less than what it is, and you get concessions. Like there's just a lot of different opportunities out there, and I think people are nervous and scared to take action because change is scary. And the only best way to move through change is to create a plan and have a conversation with someone other than yourself in your head, because you will talk yourself out of it
Every
all
time.
the time, every time.
Every time.
So, and just because you talk to us doesn't mean we're going to force you into be like, oh my God, you got to do this. But you're going to be able to make that decision with the information that we provide.
100%.
Okay. Good talk, Benjamin.
Yes. Thank you guys. Let us know if you need anything.
Absolutely. Have a blessed day.